The energy markets essentially rallied in continuation of the demand vacuum from Middle East tensions. So we did see the continuation of those. We didn't exactly take any hits in those markets, but yeah, we were on the wrong side of those moves, which was a shame. Good morning, ladies and gentlemen. How are you doing? Hope you're all well. Welcome to this morning's Flowdown session, where we're going to go through a reflection period for the week that's just been. Not exactly been much flow, if I do say so myself. It's been a rough couple of days, the last couple of days, as we're drawing into the close next week. Is it next week? To the end of Q2. It is next week. Yes, next week marks the final week of Q2 2025 as we get into the second half of the year. And God, we absolutely are feeling it at the moment. So, it's not going to be, well, certainly going to be, I'm always optimistic, always. Thank you for a shout out there to Corriton. Always optimistic. But it has been rough going. The last few days, definitely taken a couple of hits. We lined up yesterday's running session in the morning with quite a few additions to our portfolio via the FX, metals and energy markets. The energy markets essentially rallied in continuation of the demand vacuum from Middle East tensions. So we did see the continuation of those. We didn't exactly take any hits in those markets, but yeah, we were on the wrong side of those moves, which was a shame. We also had the silver run, which had a beautiful short, which we did get the call right on, but unfortunately we were way off with timing. And I say we, I mean me. So I was way off with timing. Decided to go for the breaker structure, get in there upon yesterday's sort of FX commodity open in the US, of which wasn't really there because of the Juneteenth bank holiday over in the United States. And we just continued ranging throughout the majority of the day until the early hours of the morning at 3 a.m. where we got the big sell-off, and that was fundamentally driven as well as we had safe haven money flows coming out of silver. In that period of time. So that was that one. We had the Euro NZD, the Euro CAD. I've cleared a lot of these down now. I did send you guys the breakdown of them yesterday, so you can get a catch up on that one. But ultimately they triggered and then went straight to stop loss. Woke up this morning. USD CAD was another one, and this really sums things up. This really sums it up. We're seeing so much of this as we draw a close to Q2 2025, and we see all the commercial institutions sort of rebalancing and repurposing, old positions in old points of liquidity and stuff like that as they do their remeasuring. And this really sums up where we're at the moment. Got a really nice breaker structure down here, trigger the trade. It stayed in the trade, like in profit for a minute, and then went straight to stop loss after ranging in liquidity the entire actually, all due respect, it wasn't that long, was it? It was probably from 1 a.m. until 10 past 2, so about an hour. And it went straight to stop loss, so it triggered and then straight to stop. So that's another one. USD yen as well. We did have our planned short on that one. That one wasn't a stop out though. That one's just been simply removed. Oh, sorry, no, I do beg your pardon, guys. We had a USD yen long, didn't we? I think we removed that in yesterday's session, though. Actually, that USD yen long, but that one was gone anyway. So it's been, it's been a bit choppy, hasn't it? It really has. It's been a bit of a choppy road. with yesterday, with the inclusion of the USD CAD loss, that's going to be a drawdown from peak to 1%, I want to say, which will leave us at about 1% for the week. Now, it's not a bank holiday in the US today, so I am planning on trading this afternoon's US Open, and hopefully planning to take a couple of wins out of that one, which would be nice just to bolster our gains. Otherwise, we're going to be finishing the week at 1% up. Now, look, gains are gains. Absolutely, I'm down for that. But after the string of losses that we have had recently in the FX space, in particular, it would be nice to get a couple of wins back on the board. I'm not going to be bothering with FX, obviously. We'd never, ever want to bother with FX on a Friday. No point looking at metals and energies either on a Friday for the same reason as, the FX market. But with our US indices, these are happy, these are trading, these are looking healthy at the moment, actually, all things considered. So we are going to be looking at those this afternoon, and I will be releasing the full written review and report for these in the pre-market at about 1:30 GMT this afternoon. So please stay tuned for that one if you are interested in trading those US markets. So look, in reflection, in general, guys, it's been one hell of a hot week. Weather-wise, it's been a pretty sticky week in our financial markets this week as well. We've certainly had, we've certainly taken our punches this week. I'll tell you what, we'll have a quick flick over to the trading history, because I think, well, actually, no, I'm not going to speculate. Just give me a sec. I'm just going to get over to the trading history. So, yeah, in terms of our trading history then this week, I mean, when did the week commence? The 16th, was it? Yeah, 16th. So from the 16th, I mean, we've executed quite a few positions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 trades this week so far, obviously excluding this afternoon. Probably bring that up to 20, I would say, maybe 18 to 20. We've certainly taken the punches. I mean, we've had 1, 2, 3, 4, 5, 6, 7, 8 out of those trades so far have been losers. Obviously, remainder have been winners. We've done some pretty decent trades as well, though. We definitely had a decent German 40 sell, and we had the US 30 buy during the week. That was a 0.67 and a 0.65. We also had a 0.61 on our euro dollar sell as well, so that was quite decent. The rest of them, with the reduction in the risk-reward ratios, have been coming in at an average of around 0.47, so just shy of that sort of standard 0.51, 0.52 net return. It's been okay. It's been okay. And as I said, we've taken about 1.07% so far this week in the green. So really hoping we don't go and hand that back to the market this afternoon either. Yeah. But win-loss ratios obviously dropped quite significantly. We were at the beginning of the week 55.9 and we're now at 55.7, which is quite a big jump considering the amount of trades that we've got obviously in this account. But yeah, it's just one of those things, especially at the end of a quarter. We always get mixed volatility. It's not a surprise. It's something that we are used to, and it's about weathering the storm. And frankly, apart from our egos being dented and taking a few small losses, in total, we're not that bad off at all. Nothing significant's happened. And so we just have to keep pushing on and keep rinse and repeating the same damn process. So that's exactly what we're going to do. We're just going to weather the storm. Hopefully in July we're going to start to see a bit of an increase in trading volumes, maybe second or third week of July, as we head into the sort of mid to the end of Q3, and then things are really going to ramp up until Christmas time again. We've got a lot of good room to breathe before the end of the year, and a lot that can be achieved in that time. So everything's all right. It's all okay. We're just going to wait to see how things go. It's always swings and roundabouts. And at the moment, we have seen a lot of indecision, especially in the FX markets. We're getting a lot of this kind of price action where we will be scattered and ranging into big breakouts, then straight the back down again into the scattered and ranging motion. And it's incredibly hard to tell where to go, and how to navigate these markets, even for me. So don't be hard on yourself if you found it really rough recently, because you're not the only one. It's incredibly difficult to navigate at the moment. The problem is, in hindsight, you're thinking, oh yeah, these waves all look fine. But actually, the reality of trading that is you'll be using the points of inflection in liquidity to navigate these markets, which means actually that wave then gets cut down to here. Then you're looking at the floor to trade away from, which is about there. And then you've got to get your breaker structure point in tow to sort of get into the trade idea. So then you're probably looking, well, where the hell would you be looking at in this Aussie CAD setup at the moment? Maybe there, for example. And then you have to think to yourself, is that a trade that I'd actually take? So that's your target profit there. Would you have your stop loss at the 50% point? That's a 1 to 1.6, so we wouldn't do that, which means we'd have to have the stop up here somewhere. And that, in hindsight, is a perfect trade, isn't it? But the reality of taking that, when the market's doing this, and when you're like there, I'm just thinking to myself, I don't think I would take that. So it's very, very important to acknowledge that the markets in hindsight look fundamentally different as they do in real time. And I think a lot of you guys, this, but it's about actually running through it so you can physically visualize what that situation would have been like and question whether or not you would have got in those trades. Because even with the recent string of losses, I'm still actually really happy with what we've done. I think I probably dropped the ball on that silver short, if I'm honest. This, to me, was hopeful and not high probability. That's what I would say about that one particular trade. It's a hopeful trade and not a high probability trade. Looking at this in real time, 8 a.m. low, well, it's right bang in the middle, isn't it? And I could have said, there's a bit of a margin there before we got in there, but the fact is we've broken structure and it's failed. I was looking back in time and this is looking really good, but it just wasn't there. It wasn't fine-tuned enough. So I think I did drop the ball on that one in reflection. But in general, I think things have been absolutely fine. I think things have been absolutely fine. Don't feel bad about it at all. And a lot of these have been the case for many of our trades. Right, we've really have suffered a ton of these trades over the last couple of weeks, where things have been just dipping into the entries and then immediately rejecting, coming back to stop loss, where there is a great deal of market indecision. So as we're on an excuse run at the moment, there's also the fact that we are under a huge amount of geopolitical tension at the moment. Not only do we have trade wars which are occurring all over the world and causing incredible amounts of sticky inflation and increased monetary policy. I mean, the BOE press conference, we were hearing the fact that we may even see a 25 basis point rise in the UK here, which is mental. We're not seeing inflation go anywhere. Same with the US as well. Their rates remain the same. On top of this, we have the Middle Eastern situation going on at the moment with Iran and Israel. And of course, we have the fact that we've got a president in the United States in the White House who's actually considering getting involved in the damn thing. So there's a lot going on at the moment, which create an incredible amount of fear and uncertainty. And when the markets have that fear and uncertainty, what do? They range. They are indecisive because investors don't know where to put their money, and they are being incredibly reactive to anything that they hear coming from various sources of information, Twitter or whatever you want to, wherever it comes from, and they'll be bidding and selling all over the damn shop as a result of this. So the fact that you guys may be down a couple of percent, maybe 3% or whatever, or you may be break even at a time like this is actually kudos to you for being able to sustain yourselves throughout this period of time. Okay, I mean, and I really mean that. If you guys are 10 to 15% down, then possibly we need to reevaluate your risk positioning in looking at your scaling out of maximum portfolio exposure in terms of a risk strategy. And by the way, I'm absolutely happy to jump on a call because inside obviously the trading room we have the ability to jump into a channel. I can't remember what it's called now off the top of my head. Hang on a minute. What did I call it? What did I call it? Oh yeah. The live trading discussions room. We can jump in there and just have a chew the fat for 10, 15 minutes whenever. I'm happy to do that. So if you guys want to chew the fat about, putting risk strategies in place, or if I have previously had, some private sessions with any of you, and you ultimately want a refresher on the risk and just for me to review it, absolutely fine. No problem at all. So just let me know. And that's about it. Yeah, that's about it really. Obviously, I'm going to get the US market stuff out to you guys at 1:30, so you've got access to that information prior to the US Open. So we're ready for that one. We'll be trading it this afternoon to try and get a couple of extra wins in the back pocket before the week comes to a close. And then it's just about chilling out for the weekend, enjoying the weather, and getting ready for the last week of Q2 2025. So, yeah, that's about it. Hey, Scotty D. So if there's no questions, I will wrap things up there for the morning brief. No problem at all, buddy. I hope you have a good day today. Remember, stay tuned this afternoon for the US Open if you're about. If you're not, then enjoy your day. And I look forward to catching everyone on Monday. If I don't speak to you again before the end of the day, have a fantastic weekend. Great couple of days off. And I'll catch you bright and early on Monday morning. So I'll see you then. Thanks a lot, guys. Take care. Cheers. Bye-bye.